Welcome to Charts Today. My name's David Linton, and today's edition for Monday, the 28th of March, comes to you from London. And markets looking quite mixed this morning. Equities mostly stronger, but we have the spectre of coronavirus taking off again in Asia. And I was looking at just the Chinese COVID cases. This comes from our World and Data, which is one of the services that you can integrate into your Updata system. You just go and choose here our World and Data, and it's a free website, global data for coronavirus, and so you can chart pretty well any COVID chart you like. And this was very valuable during the pandemic, less so of late, but now that China's got rising cases again, it's quite interesting to look at this chart. And here we see really this is the second wave for China. They avoided really a second wave through very strict lockdowns. And there is a strange irony. I posted on LinkedIn this morning. There's a strange irony that this is going to suppress demand for commodities, particularly oil and gas, LNG and crude oil, with Chinese lockdowns reducing demand, which is effectively helping price demand in Europe, where we're seeing that constraint because of the Russia-Ukraine situation. So quite interesting that Chinese demand is effectively helping reduce commodity prices, and that's really where we're starting today. So we start by looking at the dollar index. The dollar is stronger, pushing higher, breaking out, bullish in all three time frames. We've been consistently saying 2020 is the year of the dollar. We've got some very big upside targets, and that means that the euro is back below that 110 level. This is bearish on the weekly chart, the daily chart, and the 60-minute chart. Long-term, medium-term, and short-term, we are bearish with the corresponding point and figure targets. So below that 110 level is not good for the euro. Dollar against the yen is pushing ever higher. We said last week that this was a lead indicator for the dollar, and here we are, we're pushing higher. So that dollar strength really showing through. Sterling falling back on that dollar strength, and on the euro we were just above the 120 level this morning, but we've pulled back a bit. So sterling is relatively neutral against the dollar. Bitcoin has really moved, actually. It's found that long-term cloud support, and we're now back through the cloud on the medium-term chart. And so we are seeing cryptocurrencies now looking bullish on all three time frames. And of course, we had this historic target of $83,000 still very much in place. Looking at the S&P 500 index, we were up 0.5% on Friday. That's the weekly candle. And we are just nudging higher, but the lagging line, of course, is not yet through. And if we look at the Nasdaq, we are still below the cloud, hitting some cloud resistance there on the price. The futures today down 0.2% on the S&P and down 0.4% on the Nasdaq. Tech stocks still coming under pressure. The VIX volatility sitting in the low 20s, so the market is less fearful than it was, having fallen right the way back in March, but still the trend is up, although we are just starting to fall through the cloud on the daily. FTSE futures up 0.33%. The DAX in Germany, some relief on gas prices there for Europe. We still have to get back above 15,000. That's going to be the critical level for Germany. The CAC Quarant is also up strongly. So Europe got a strong showing. Japan was down 0.5%. The Hang Seng actually up 1.3%, but the Shanghai Composite, with a spectre of lockdowns in China, the Shanghai Composite, a city of 25 million people, the main financial center of China, and we are just seeing now the weekly cloud just coming under pressure. So Chinese stocks looking worrying. Looking at the Sensex, we were little changed there, and the Aussie market little changed, the resource-laden stock index. Of course, the interesting thing with the Aussie market, which we pointed out before, is it's one of the few Western markets not to activate its downside target. We'll look at the energy mix shortly. We're seeing commodities relatively mixed. Wheat down 2%. The key thing is, can we make a lower low? So will we fall back below that low that we set? That's going to be really interesting to see. Gold sitting at 1928, again just falling on that stronger dollar is a factor there. It's an inverse relationship that's well known. Dollar goes up, commodities fall, vice versa. But we are just seeing we are seeing fallback there, and 1900 is a pretty critical level. The long-term picture is still good for gold, but we are seeing the precious metals falling back today, and we're seeing silver down nearly 2%, palladium down 3.5%, so looking much weaker there. Of course, palladium has been very volatile with the Russia situation. Copper, one of the biggest industrial metals demand, Chinese demand really potentially having an impact, and we're just seeing copper falling back 1%. US 10-year yield sitting at 2.5%, so breaching this level really for the first time in years. So bond yields going up is a given, and that's quite key. One of the tech stocks to watch, of course, is Apple, just a good bellwether. Will we give a new upside target and negate this downside target? That's the big question. But we do have these downside targets hanging over us. Interestingly, we stopped on cloud support. Looking at the energy mix, quite interesting actually. Just before we go into that, this morning I did a post on LinkedIn about the head and shoulders pattern, and you can look that up on LinkedIn. This is actually not a true head and shoulders because we had that intraday high on the shoulder, really negating the idea that this is actually a true head and shoulders. And the other thing that's quite interesting to watch is the energy momentum. This is a chart that I do look at. We're seeing the generation fuels falling, so coal is the brown one falling away. We've seen this massive rise in momentum and then falling momentum over the last few weeks on the generation fuels. The only one to really rise there is the emissions chart, where we have got slightly rising momentum. We had negative momentum. Still, versus 21 days ago, emissions are still in negative momentum territory, but all of these calming right the way down, so that's really quite interesting to see. If we look at the chart for Brent crude, first of all, we see here we're down this morning, down some 4%. That Chinese demand impact having an effect. We've got some downside targets emerging on the 1 minute chart. Remembering this is my daily 60 minute, 1 minute. The 1 minute is really what we look at for today, and the 60 minute is the medium term chart, well, the short term chart for the week, and my daily chart is the medium term chart. So we've got this seesaw in prices, bearish below 98, bullish above 130. That's really the daily picture, but when we go down to the 60 minute, we see that we are just short term bearish. The same is true for WTI, and if we look at US nat gas, that is actually looking pretty bullish. We put out our reports to clients this morning, the daily report and the weekly report. If we look at the daily report, there are our calls, and emissions we were neutral. US nat gas was the only one that was bullish from on Friday as well, so no change there, and so that's looking pretty strong with upside targets. Coal is looking weaker. The generation fuels generally are starting to look weak. We're below the cloud there on the 60 minute chart. If we fall through the 158 level, then that would be bearish. And if we look at emissions, we're actually up 2.4% this morning. Emissions actually being a counter signal to the other fuels. So while we see prices falling there, we see carbon rising. So that's quite interesting. We're back above 80, but we're really sort of struggling at this level. So hence we're neutral today. Gas prices, quite interesting. They were saying them just recovering a little bit today. But the spectre is we are below the cloud, so that's quite key. MBP is actually up this morning. Of course, all these contracts coming to close this week, and the seasonal ones as well. So there'll be a little bit of volatility as we head into expiry. Looking at German power, we don't have a price yet this morning, but we are still seeing some downward pressure there as well. That's it for today. Until tomorrow, happy charting. See you then.